Hello, I'm Michael Glass from michaelglass.com, where we focus on making informed decisions about our financial future. Before we begin our video, you want to start off with our disclosures. Any symbols you see today should not be inferred as a trading recommendation. No matter what form of investing you choose, stock, forex, futures, options, they all have a level of risk associated with them. Any strategies we show today are for informational purposes only. Future results are not guaranteed. And finally, any investment decision you make is solely your own responsibility. Trade at your own risk. So this is our stock market technical analysis trading plan. In our video, we'll look at the past week's economic calendar and also look forward to next week. We'll see what happened as far as the most recent price action to identify key support and resistance price levels. We're going to look at the charts of the market leaders, Apple, Google, Goldman-Sachs, Priceline. We'll take a look at those. We'll look at the dollar, gold, and crude oil charts to see if there's any leading sentiment. And finally, we'll have an education spotlight at the end. As we look at the week that was, we can see that all three major indexes, the Dow Jones, the Nasdaq, and the S&P 500, all rose for the week. Basically, the market was up a little under 2% for the week. However, the S&P 500 is once again above that 1,400 price level. Across the seas, we had the S&P issuing another downgrade of Spain's debt. China's latest manufacturing numbers came in showing tightening activity. I believe the same also happened for Germany. Of course, there's a potential political shakeup going on in France. And then also we have Netherlands failing to agree on the Eurozone budget. Basically, we have those countries in Europe that saved their money and spent conservatively now being asked to, give money to the countries that overspent, and some of them are, kind of resisting. Finally, over here in the States, we had Apple blow away their earnings. It's not just on the iPads. It's primarily due to China and how much they've sold in China, the iPhones. And Amazon exceeded their expectations. So it'll be real interesting to pull up those charts. And on the economic front, we had the first quarter GDP coming at 2.2% instead of 2.5%. Of course, the FOMC decided to keep their rates low through 2014. And at the press conference afterwards, Bernanke, as usual, said that Fed is always willing to step in to do whatever's necessary, which keeps that looming question of potential easing still on the table. So overall, the week ended good, and the earnings season has been well for the market. So let's see what we have coming up next week. Not that much big players on the earnings front. We got MasterCard and Visa. The big news next week is going to be our jobs data, ADP on Wednesday, and the employment situation on Friday. We're starting off with our market sentiment leaders. Here we are looking at the dollar. You can really see 2012 has definitely been a consolidation of the price action. You can see right here we have a swing low at 78.54. Down here we have our swing low down at 78.20. It does look like we're breaking out of that 79 range, coming down pretty nicely. So we'll see if we get a little bounce here off the 200 moving average and we can hold this range. Otherwise, we're looking down. So sideways, maybe even sideways to down, because we can also see some lower highs here. The dollar looks sideways to down. What does that mean for gold? Usually we have an inverse relationship, but we see some consolidation and a little move up. We need to get above 1670, and then we need to get above the 200 moving average to really start to see some action here. We are above the value area high here, so I say sideways. I'm not going to say sideways to up yet. Unfortunately, crude oil sideways. And like gold, it's trying to make a little move higher. And we know what that means for our pocketbooks. 105 was where all these wicks to the downside, 105. Now we're seeing these wicks on the top at 105. So it'll be interesting to see if we can break it and move higher there on crude oil. So here we are. This is our daily chart of the S&P 500. And we can see here we are starting back at 1275. In January, and we hit the 1422 level, and then on Friday's price action we're back above 1400. Trading looks good. We're seen to be in the last 30 days here in the range of our high here, 1422, down to about 1350, give or take a little bit there. And so earnings season has been okay and allowing to keep this pullback. We never made it back down to the 200 moving average, which was what I was worried about. And we can see our uptrend line here, for the most part, has been holding true. Our 50 moving average here is acting as support also. And of course, we have a line in here at the 1366 price level. So right now we're moving sideways. Sideways is okay as long as you know that's what we're doing. You're taking trading strategies for that. But on our daily chart, we can see we're finally well out of our overbought price level. And as a matter of fact, we're now heading back up just a tad here on the daily time frame. Zoom out to the weekly, take a look. And we can see the pullback we had in the beginning of April. And now we're finishing a little bit stronger to make, we'll see on the monthly chart that the April is turning into a nice doji candle. Well, on the weekly, we are still kind of high. And there is room to go lower. Let's take a look at that monthly chart. And again, as I said, there's April setting up as a doji. Looking really good. Don't have to necessarily say the doji is a reverse because we had a doji here in November and we kept going. Again, we're always looking for catalysts. Always looking for catalysts. Maybe our jobs numbers will be good. We'll see. But overall, just like the weekly, our monthly is still a little bit overbought, just a little bit, or getting towards overbought. And so we do have some conflict there with our shorter time frame of the daily, which is down towards the middle, and our weekly and monthly are closer to being overbought. Now let's switch over to the NASDAQ, which really has been leading us for 2012. Heading back to the daily chart. Zooming in on 2012 price action. Very nice. And again, you can kind of see this range. We're holding up above 3,000. That was our support price level. You really could go back in here and do a 31.25 sort of as a resistance. And again, there's that sideways price action here for the past 2 months. On our daily indicators, they are out of overbought, heading back up towards overbought as the S&P 500. Coming over to the weekly. Really nice weekly chart here. There's a pullback in the month of April, ending the month strong. Indicators try to come out of overbought, but definitely still strong. Coming over here to our monthly, and again, just like the S&P 500, there's our doji for the month of April. So the market's definitely taking a breather right now. We're seeing that consolidation. And as I always say, what's going to be the catalyst to move us up or pull us back? Okay, so let's take a look at our market leaders. We're going to zoom in on here on Apple. We see our 550 held up here as we pull back. But of course, we know we had those wonderful earnings this week. So we jumped right on up. Pulling back a little bit, zoom in a little bit more. You can see we're pulling back to our moving average a little bit. 620. We peaked out here. We found a support here, peaked out here, and peaked out here. So, you know, there's certainly a rationale to draw a line in there. We'll come over here, see 602 as our point of control. We need to get really above 615 to start really breaking through the 620 price level. Overall, I would say sideways on Apple. Amazon, which was certainly moving down for much of 2012, and then we got into this sideways price action. Then we had our unexpected earnings beat, and now we're getting back up to the top side and almost running into the 200 moving average here. So it'll be interesting to see if we can get up about that and take out this last swing high at that 207. Of course, you can see the price gap. And although the point of control is down here at 193, we can see 225 starting to pack up some volume there also. Amazon, I'm going to say sideways also. So I wonder if we're seeing a theme here. Google. Here we are in here. So we're pulling back. 620 now, acting as resistance once again. Point of control 608. So as we pull back, but we also have the 200 moving average twice holding up as support. So it's going to be interesting to see where this one goes. There's another one sideways. Goldman Sachs. The theme's continuing. A pullback, 200 moving average, acting as support, just like Goldman Sachs. Oops. And we've got a little resistance above us at 118. I'm going to say sideways. Look at our point of control at 113. A lot of volume in there, but also a lot of volume accumulating, especially up to this 118, in order for us to get a price move higher. IBM. IBM pulled back. Earnings were okay over here, but at least it's retesting the highs a little bit here. I think it needs to get above this 208 price level to get back up there to 211 to test the swing highs. We are seeing it moving up, some volume accumulating below us, so at least maybe as long as we stay above the value area high here, there's room for us to go higher. This one I might say sideways to up. That's probably the first one I have any inclination of going up. Intel, definitely in this sideways price range, retesting the highs. Like IBM, I'd probably say sideways up on this one. It's also above the value area high here over the past couple days. Sideways up on that one. MasterCard, making new highs. But remember, this week, MasterCard has earnings, so it certainly could be a run into earnings. Up, MasterCard. Again, caveat that they have earnings. Netflix had earnings. Disappointed a little bit. You can see the drop off here. Now we're back down into the 75 to 90 range. We got right out of the range that we were in, back down to here. You notice this little area right in here, 89-ish, is what held as resistance as we came back up, now pulling back. Sideways to down on Netflix, and finally Priceline. Priceline, like IBM, like Intel, retesting highs, sideways up. So we do have 4 sideways up. We had about 3 or 4 sideways, and then we had Netflix sideways to down. What does that mean? Well, we said we started with the market is going sideways, and our market leaders are going sideways. So again, what's going to be our catalyst? Earnings could get some of these leaders moving, and then the jobs data, which usually helps the banks data, the bank stocks, finance stocks, which could get the market moving, Goldman Sachs moving. But we'll see, again, good or bad, find that catalyst and then trade it. As we come to our education spotlight, we're now talking about what it is to be a high probability trader. So what is it? We're basically looking for low risk to reward ratio. And of course, we want to make sure that we have positive expectancy. How do we get that positive expectancy? By back testing. We don't just trade something we find on Google. We don't just trade something we read in a book. We test it out and make sure it works. Not only does the system work, but does the system work with who we are as traders? Again, that's one of the biggest things out there. There's a gazillion trading strategies out there, trading strategies, and a lot of them work. But a lot of them don't work for you. Your budget, your risk tolerance, who you are as a trader. Just because it works for somebody else doesn't mean you'll be able to implement it effectively by being able to control your emotions. As we look at some characteristics of high probability trading, we're looking at making sure we have predetermined money management. We know where our stop is. We know where our target is. We're trading in the direction of the trend, and we have a defined exit strategy. Again, where's our stop? Where's our target? So please like, comment, subscribe to our channel so that we can continue to give you guys what you're looking for here in 2012. And our resources, we have our coaching. We have a lot of fun coaching some people here over the past couple weeks. And if you want to allow us and our expertise to work for you, we have our managed Forex accounts. We're using Forex because of the leverage and also because of the transparency. We'll devise a trading plan just for you. And we do have some stock advice for you too here, so make sure you check that out. In the end, it's all about developing a trading mindset, being able to make educated decisions about your portfolio, about your investment strategies to help you reach your objective goals. Thanks, guys. I'll see you next time.